Hello from Otet Markets. This is Ahura with the global economic outlook in the week ahead, which is going to be the 48th week of 2024. As always, let's check what we had first previous week, and then we can see what we can expect from the week ahead. Last week, geopolitical tensions increased in the cryptocurrency market after options being released. The market got huge movements with BTC getting so close to 100,000 US dollar. In the stock market, we're under effect of the new administrations, the new government in the United States selecting or can say somehow offering by President Trump. And also the economic data that we had. Economic data generally in the US was the numbers that are published somehow were positive and fine out of the US. They were missing the expectations. With these data that we had, generally with the speakers from the Federal Reserve and outlook that we had from the economy and geopolitical tensions, the possibility of the holding the current rate for the Federal Reserve in its next meeting in December got more than 47% chance. That was around 31% previous week. Let's see what happened in economic calendar. In the US, last week, the most important data that we had, it was the housing market data. Tuesday, we had housing starts. After 1.9% falling in September, housing start continued to fall further with 3.1% in October as well, which means we had less construction projects started in October, and also the buildings permits also they have been decreased during the October. Generally, it's somehow we can say it's normal in this winter time. We don't have we should not expect too many new construction to be started in December in a winter in such a cold month. But on the other hand, for the housing, for the existing home sales, we could see a really nice improvement after 1.3% fall in September. October new home sales, existing home sales increased by 3.4%, which means more than 3.96 million units have been sold from the existing home during the October. That's because mostly because of the lower rates that we had in the late summer. This late summer's lower rates helped the housing market to move further. That can be something that you can expect for the new home sales also to be seen in a week ahead. But again, the mortgage rates again increase. So in the next month, we can see more again a little bit more pressure in the housing market, more positively. Continuing the data on Thursday, we also had labor market data as always, all the Thursdays. Initial jobless claims increased by only 200,000. So we had only 200,000 new application to get the unemployment benefit. That was very lower than 220K expectations. On Friday, also, we had PMI numbers. The PMI numbers for the service sector increased very nice from 55 to 57, while manufacturing PMI numbers, purchasing managers index, increased also from 48.1 to 48.8, but still it's under 50 level, which means that still the manufacturing sector still is under pressure. But generally, if we look at the composite PMI, which increased from 54 to 54.1 to 55.3, we can say that generally the data are somehow better than expected in the United States. On the other hand, if we look at the Michigan surveys, the Michigan consumer expectations increased also from 74.1 to 76.9. Even thought it was a little bit less than market expectations. Same for the consumer sentiment, which increased from 50.1 to 51.8. While it was less than expectation, but still it means that it's increasing. Now remember that we had the same numbers previous week, same data from previous week from years, but with the different numbers in negative territory and in fall. In negative territory, it was falling further. Out of the US, the geopolitical tensions increase, as I mentioned, the geopolitical tensions increasing between the Ukraine and Russia. Though in the previous months, this increasing the tensions and also getting closer to the winter and too many other reasons that all get together to put the pressure more on the Eurozone economy. We could see that inflation was steady at 2%. The core inflation also at 2.7% in October. But later on the PMI numbers, which published on Thursday, but Thursday PMI numbers, or when it was Thursday, no, yeah, it was on Thursday, Friday, on Friday. If you look at the data and PMI numbers from European countries and generally from Eurozone, for example, as example, if you look at the Eurozone, the service PMI fell under 50 level for the first time in the previous last of 5 or 6 months, probably. From 51.8, it fell to 49.9. That means that even the service sector, 49.2, that means that even the service sector is very weak kind of. While the manufacturing sector, it was weak under 50 level, 50 area, and it is continuing still under that exponential level, and still the Eurozone economy means that's still under pressure, affecting by the geopolitical tensions, affecting by too many other reasons that if you look at the bigger picture, we had the same problems right now in the German, especially in the German economic problem in Germany. If you add the political tensions to these economic activities, also you can say that the German economy doesn't have a good situation that can affect the Eurozone economy as it's the biggest Eurozone economy. But generally, with the other data from the France and other economies, also they were not positive. From in the France, also manufacturing activity fell from 44.1 4.5 to 43.2. The service sector also, which has been increased 2 months ago because of the Olympic Games, fell under 50 area. We can see that 49.2, from 49.2, it fell to 45.7. Generally, the data shows that we couldn't rely too much on the Eurozone economy. That the same problems we had in UK. The UK service sector also fell from 52 to 50, while the manufacturing sector also fell from 49.9 to 48.6. Generally, this is while the inflation increased in United Kingdom, the inflation which has been fell to 1.7%, increased to 2.3% annually, which means that in the monthly scale it increased more than 0.6%. The core inflation also in United Kingdom increased. The same for the producer price index or producer inflation. Generally, the data in the United Kingdom shows that the inflation increasing and economy is getting more weaker numbers, which can put the BOE under pressure to go further with another rates cut. This is why more rates cuts also bring this the economic activity. This is why the more rates cuts increasing the risk of higher inflation again, which again, actually we can say right now after the Labour Party's new budget, now we have more higher risk in the market. Generally, if we put the data and condition together, we can say that it's better for the for Bank of England to hold the rates in its next meeting in December. But there is a 50-50 chance still for the rate cut, 25 basis point rate cut or holding the rates. I think that could be better if the BOE hold the rates for December meeting, not going to for cutting the rates. This is the most important data. In Canada also, we had inflation numbers. We could see that in Canada also inflation increased. Inflation increased, the same thing that happened in most developed economies. In a week ahead, if we are talking about the inflation, let's go for a start with the inflation numbers from the United States that we're going to have next week on Wednesday. We know that the next Friday going to be holiday in the United States with the Thanksgiving Day, but on Wednesday we will have the personal income and personal income and spendings numbers. The most important inflation number, PCE and core PCE price index, which are going to be published on next Wednesday. We're expecting the both PCE and core PCE price index both to increase by 0.2 and 0.3%, repeating the same numbers that we had the previous months. But it means that in annual scale, the core PC price index can increase from 2.7% to 2.8%, or still again be steady around 2.7%. And PC price index can increase from 2.1% to 2.2 or 2.3%. That means that we have a more inflation risk in the market, which means that the central bank will be more motivated to hold the rates in December, meaning not cutting their rates. At the same time, durable goods orders, which we are expecting to be published on Wednesday, we're expecting a little bit better than expected, a little bit improvement in the durable goods orders, especially with the better than expected retail sales that we had in previous months, which means that getting closer to the new year, people are getting more motivated to buy the products. So durable goods orders could be positive, which again can motivate more the central bank to hold the current rate. On Thursday, on Friday in the United States, going to be the holiday. On Tuesday, we're going to have the new home sales data, which we are expecting to see a little bit increasing after previous week's existing home sale increase. We are expecting to see the new home sales also to be increasing October. This is generally that data we are going to have from United States, but make sure you got to follow the political news, especially the new administrations and the new candidates for administrations. We can say the candidates, and also we can say just the final the final we can say these administrators that gonna be nominated by the President Trump. They are very likely to be approved by the Senate, as they're right now. The Senate is totally under control of the Republicans. So these options, they are not options somehow. They are new, and we can count them as a final administrators that going to be they're going to start their job next year in January 2025. Out of the US, we get on Monday we are having the IFO current business situation and expectations from the Germany. Going to be a little bit the market's expecting to see a little bit weaker number. We can say that between the expectations from the economy that we had, we can expect a little bit weaker number compared with the previous months. On Tuesday, out of the US, we don't have that much important to be published. Just in Japan, we have the inflation numbers. In Japan also, we are expecting to see the inflation a little bit increasing, same as what we had in Canada last week, same as what we are going to be expected on Wednesday from United States and other economies that we had the previous week. On Wednesday, out of the US, we have the central bank meeting in New Zealand. We are expecting to see another 50 basis point raise cut. We know that RBA has cut the raise by 50 basis point in its previous meeting in the previous months. We are going to see most probably another 50 basis point raise cut. We know that the economic condition is not so well in New Zealand. This is why the inflation incursion, we shouldn't be too much worried about that, as the biggest business partner that New Zealand has, Australia and China, they don't have inflation pressure. So we don't have too much worries or concerns about inflation in New Zealand. That's why we can say that, okay, the Central Bank of New Zealand or Reserve Bank of New Zealand can cut the rates by another 50 basis points on next Wednesday. And on Thursday, we're going to have the inflation number from the Germany, which happened in Eurozone, going to be repeated in Germany as well. We are expecting to see the inflation around 2%, with CPI around the 2%, with more inflation increasing on a monthly basis, like 0.4 or 0.5% inflation increasing on the monthly basis. On Friday, we don't have too much important data to watch. We have just the most important data is Eurozone inflation, the final numbers for the flash numbers for November. We are expecting to see the same numbers as we had in for October to be repeated and for November as well, which means 2% for CPI and 2.7% for core CPI. They are the flash numbers. Market going to avoid them. We are not going to be look at them so seriously. This is generally what we are going to have in economic calendar next week. But if you look at if you say that, okay, what we can expect with this data from economy. Okay, this NZUSD chart. Let's start with here. With the 50 basis point rate call expectation from RBN's in Newsline, we can say that our NZUSD can continue its downtrend with more pressure on Kiwi. As we start from the US dollar index, continue with US dollar index, the USD continued to increasing last week, but move a chance for the holding the rate in December meeting in one hand, and other hand with increasing geopolitical tensions in both Middle East and Ukraine. That means that the condition and situation which can continue in the next week as well, but we don't have too much rooms to see the US dollar increasing, which means for now, we can say that for the UK, we can say that the Zoid movement with the slightly downward tensions, but generally the Zoid movement is the most expected trend for the US dollar index in the week ahead. And but the index can stay around above 106 area. So something around 106 and 107 is the area that we're expecting to see. So it means that next week US dollar index can still stay higher, but not going further too much. As for the gold, we desired movement in the US dollar index with the higher geopolitical tensions and getting closer to the year end. So generally, all is that it means that the gold still can continue its uptrend that started, but not with the same pace that we had there last 2 weeks. Mostly the golds can continue slightly uptrend. So gold will be an uptrend. As for the oil, closer to the new year, more manufacturing activity, more troubles. They are the options that, with the higher tensions in the geopolitical tensions that we have in the Middle East and Ukraine, we are expecting to see a little bit more demand for oil. But at the same time, the outlook for 2025 is not so bright. So that's why we can say that the Zoid movement with the uptrend tendency can be the most expected trend for oil. The other on the flip side, for the stock markets, we are expecting to see with the higher expectations of the holding the current rate in the December meeting with the geopolitical tensions and getting closer to the year end. All this data that they were positive for the gold for US dollar index, they are negative for the stock market. So after the previous weeks increasing or the correction, we can say now we are expecting slight movement and slowly falling in the week ahead in the stock markets. So the downtrend Zoid movement with downtrend tendency in the stock market is the most expected scenario. As for the cryptocurrencies, especially with the Bitcoin, the first support sits at 94,000 and then in the 90,000. Generally, we can say that still the Bitcoin is still in the uptrend, and we can say that this uptrend can continue further for now, unless if the price fell under 90,000 US dollar. Otherwise, the uptrend is still there and can continue further. So this is what generally we had previous weekend. We're expecting from the week ahead. If you had any other questions, do not hesitate to write down in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.